All right, guys, welcome back to the channel. Apologies about the voice. I've got a life update. I'll leave that till the end of the video, but right now we've got to look at some Bitcoin speculators getting massively long at this stage in the market, what that could potentially mean, and of course, my own analysis when it comes to the price ranges and price targets for Bitcoin to flip from where we are into something a little more robust into that bullish sense. I've obviously got to get through the S&P 500. We had the week close out on Friday, also the NASDAQ, and some longer term data for 2024 when we take a look at the overall cycle. So, you know what to do. Without further ado, smash up the like button. Let's go for 4,000 likes today. Thanks again for your support on the channel. It's your home of macro cycle analysis, looking at Bitcoin, crypto, stock markets, and of course, real estate. All right. Let's dive into this piece. Pay very close attention to this. I reckon this is going to be something pretty massive over the next couple of years, which for you guys that are following the channel, if you're not, thanks for dropping by. Make sure you do hit the subscribe. This is our 18.6 year cycle. Several other YouTube channels have made mention to it. One in particular is Elio Trades. So if you don't follow, go and check his stuff out as well. So he's been following this from our channel, looking at the end of the cycle. Still a big bull market to go into 2025, 2026 for real estate and the economy. The stock market may go a little longer. Bitcoin may go a little shorter. We haven't done a full 18-year cycle for Bitcoin yet. Remember, Bitcoin did start end of 2009. And this cycle began, the new cycle anyway, around 2011, 2012. So there's going to be some interesting times over the next couple of years as we lead into this peak. Major bull run. I've talked about it being the everything cycle. The everything bull market, the everything bubble. Things are going up for these next year or two, depending on which asset we are looking at. But before I get too sidetracked, this is pretty massive when it comes to money flowing into the market. Around 16 trillion. 16 trillion. What's the US debt? It's about double that, maybe about 34 or so trillion. But this is just 16 trillion in free equity is available in the US markets. If Freddie Mac's proposal frees up just a tad of this pool of money, it is stimulative. So the blue line is mortgaged homeowner value. So real estate value in the US, sitting at about 36 trillion. Mortgage debt outstanding is the black line here, about 20 trillion. Therefore, the free equity is about 16 trillion. And what the hell has this got to do with Bitcoin, cryptocurrencies, all of the degenerate crap that we love to look at to gamble on, trade on to make more, I don't know, sats or fiat, whatever you prefer? Well, if there's going to be some money getting into the market, more of this type of money, I would bet, you don't have to, but I would bet that some of this is going to find its way into Bitcoin and cryptos. And if the total market caps at the moment for cryptocurrencies is sitting around, it was about 2 trillion. There it is, 2.2 trillion. This is for everything. Then it doesn't take much to get the entire market cap moving, especially when you can consider that a lot of this stuff is still locked up, which means there's less on the market to grab, even though the total market cap is about 2.2 trillion. So this looks pretty massive to me. Obviously, you guys do you and your own analysis. But when you've got a ton of money sitting on the sidelines, especially at this later stage of the 18-year cycle, whether you have come to understand this and you employ it into your own investing or not, up to you. But in these later stages, what we have seen over the last roughly 200 years or so is that this is the winner's curse. Money eventually finds its way into the system, and this is what tips things over the edge before you get this mega collapse due sometime later in 2026. I don't know for sure. I don't think we need to worry about that for now because still plenty of time to go for the upside before we need to start worrying about the downside. So lots of money there. I think this is a pretty important one to come back and have a look at over the next couple of months and years, of course. So that's where we are in the macro cycle, which is why I still think it's pretty bullish for Bitcoin and crypto. Some of this money is going to find its way in. People are going to take out, if they can, use some of this money on the sidelines that's in available equity to then go and throw it into real estate. Maybe they go and speculate on Bitcoin and cryptos, maybe the stock market. Maybe they go and buy gold and silver. I don't know what they do, but even if that little bit of the little bit finds its way into Bitcoin and crypto, you can imagine what happens there. The stock market has been up again. So we got 3 green weeks now, 2 up weeks and 1 inside week because you had a lower high and a higher low. All still pretty positive. We've looked at this being 3 red weeks, so the possibility of a rally and then another correction. At this stage now, it seems more unlikely that we'd see a mega crash from here. You can see back in August, September, that there was the 3 red weeks down. There was a pretty decent rally, and then it took another several weeks to find that low in October. That's one option. It didn't necessarily go that much lower, 5% low to the exact low point to the next exact low point. It'll feel, if that did happen, of course, it's going to feel like the markets are coming crashing down and that was the top. Everyone missed out and show's over. I doubt that's going to happen based on what I just showed you here without going too much into detail again, repeating myself. But the end of the cycle has still got a little bit of time to go, as we can see with the amount of money on the sidelines here, just in one example. So that's one example I think that could happen over the coming weeks. But the other example that could happen is something like 2020. We had the 3 red weeks down, the rally, and then the higher low form, and then the market basically took off again. You had a huge move out of the COVID crash. Similar signal here, so forget the fundamental event that happened there. This is the important part when it comes to understanding the technicals on a chart as opposed to reviewing the fundamentals of a particular period and trying to say, well, that was that fundamental and that fundamental is not happening right now, so therefore it can't happen. Forget about that. Just look at the technicals. That's going to keep you on the right side of the market. You got a high low here and then market took off. So there's a couple of scenarios here. If it's the worst, it doesn't seem, at least in my opinion, I don't think a 5% from low to low is that bad. And in this case, well, you got a higher low and then the market sort of moves on from that point. You got to weather out the storm, of course, and that takes weeks. And a lot of people in the market think day to day is basically the start of another collapse if you get a down day, or the start of another mega pump that everyone missed out on the lows when you get an up day. So the S&P is looking pretty good. NASDAQ, same sort of thing here. It's moved past its 50% level. Had a couple of weeks closes up here, but the volume is dropping off. You can see the volume drop off. More in particular, last week's volume is quite low compared to anything we've seen previously. So it might need to come back and test some of these prices, gather up that momentum again, and start to move its way higher. Still got a bit of time in the bank here from what happened in the past. You can see the fall from the tops took about 18 weeks to get back to the top. And if we look at half of that half of that time, 9 weeks takes us out to next week. So this week and next week, if we did half that time to get to a new all-time high, it'd still be pretty damn fast to get to that new high price. So the stock market's looking relatively healthy after last week's close. I've looked through the international markets as well. I mean, UK bursting to new all-time highs, Germany bursting to new all-time highs again, France, new all-time high again. This is wild. You know, markets are correcting, putting in higher lows, consolidating, and then pushing to new highs. Every time this happens, you got that wall of worry. People are getting fearful of, what do they fear last week or the week before? It was something to do with inflation or interest rates or CPI data or you name it. Someone's going to let me know in the comments section for sure that there's some other economic thing that's different this time than it was last time, and you better watch out for it because it's going to crash the market. Like, you know, we've heard this so often, and I've heard it for many, many, many years over and over again, and the market just keeps going up from that point. When things get really bubbly at the top, that's when you got to be worried. Not worried when things are looking bad, because it's typically around some sort of lows, as I'll get to with Bitcoin in just a moment. Another quick one just to have a look at is China. No one talks about that anymore, do they? Everyone was talking about it back in January, where China was on this big downtrend for the last several years. And now that it's put in some higher lows and is pushing a little higher, no one's talking about China anymore and how bad the situation is over there, or at least not to the same degree as what they were a couple of months ago. This one's an interesting one, knowing that the stock markets have been up. S&P 500 is up 9.5% in 2024. Average year since 1950 has been 9.3. That's an average year. This is interesting because you can see the average years themselves. There's only a handful. There's 4 of them there, 8 to 9%. Otherwise, you get mega big years or mega bad years. There are some sort of flat years there. 1994, that looks like 1987, 1984, 1978. But overall, you're going to see pretty decent years to the upside or pretty decent years to the downside. And typically, you don't see them happen one after the other. You don't get like a big up year, a big down year, a big up year, and then another big down year. Like it doesn't happen like that. It can. There's no guarantees. The probabilities are just unlikely that that would happen. So I'd have to favor that we'd see another pretty decent up year. Odds favor a good deal higher from here or a good deal lower. What do you say? Good deal lower in 2024 or a good deal higher? Obviously, I'm on the side of good deal higher, which means everything else is going to be looking pretty damn rosy as well. Looking at Bitcoin, cryptos, real estate. It's pretty favorable to the bull side, especially with this data. Now, Bitcoin data here. BTC, commercial hedges, net position. The green in the background here is when the commercials are net long, and the white is when they're not net long, obviously. So this is going back to 2023. Looking at the smart money buying BTC, we've just seen another one happen right here. So although this isn't my TA using my Gann swing analysis, looking at my 50% levels, I think this has got some merit to it, where you can see that they've gotten long when the trend has begun or just before the trend has begun. So they're sort of waiting back here for the consolidation to break out. What it looks like here is they were waiting, they got the breakout, and then waiting for it to break again. Didn't happen, so they got out. Then you had another test here, didn't happen. They got out and waited for the breakout. So the way I'm reading this, obviously you do you, but the way I'm reading this is that they're potentially waiting here, thinking that that may have been a bottom and waiting for that breakout now because you've had that bounce, or they're in a little bit too early like last time and we have to wait it out, another test, and wait for that move higher to confirm the breakout. Either way, that's an up-down scenario. Obviously, no one knows what's going to happen on the right-hand side of the chart, but it seems like a relatively okay time for that accumulation to occur because of where we sit overall, looking at the potential possibility of that breakout happening next. And should that breakout happen, well, then you probably want to be on the right side of the market. And in that case, if the breakout's to the upside, there you go. Upside is the right side to be on. And to the downside, it seems relatively limited at this time, as we'll have a look at on our chart now. Looking at BTC, it's at 61,500. That low that came in at 56,500 down to the previous lows at 52, 53 takes you about a 7% loss down to about a 10% loss. So basically just looking at the low to the next key support level, roughly 7 to 10%, take it down to the 50% level of the entire move here for the September move, that is, takes you down to a loss of about 13%, which would also be the top back in January, the ETF top. So if you can put into your portfolios or put into your own plan that there is a possibility of something like a 7 to 13% loss from that low, not necessarily worst case scenario, but probably one of the worst case scenarios, and then you can layer in on top of that, then you're probably not doing too bad. That's to answer the age-old question, is now the right time to buy? Should I buy Bitcoin now? Well, yes and no. If it's yes and you want to buy Bitcoin now, just know that it could go to those prices we're looking at, 53, 50-ish, maybe 48, 49. And if it doesn't, it only stops in at 56 to 58, even better. So that's the understanding that if you are to buy now, can you stomach the losses to the downside? If you can't, don't stay in the game. That's the problem here for a lot of people. They can't stomach any sort of move to the downside. So looking at this in the, we've got the daily chart here. It moved up into that high and then back down. I want to get to that on the 50% because it basically hit them on the head again. We hit those 50% levels. The main thing here, if you can take away one thing from this chart, 65K is still the key level. So that was what we said the last few days, because obviously you had the low come in. There's your low 1st of May, so now 13 days ago. Hit the 50%, pulled back, and now it's sitting above the 50%. So that is the key level for this market to begin that sort of bullish flip from the weak half of the 50% to the stronger half for this move here. So this is the decline. So you can get back above that 50% of the decline. Overall, it's still sitting above the 50% level that it had on the run up. So that's the run up from January to the peak in March. It's come back almost dead on that 50% level. When that happens, pretty strong. Probabilities are on the side of the bulls still for that longer term perspective. What I would say is if we were to fail again at 65, that would then continue to increase the odds that you're going to see further downside. Now, to the short term, I mentioned last week a failure at 63. So that was on the shorter term chart here. Testing of the low would then increase the probabilities of us testing lower prices. We've got the test at 60, and so far it's bounced away from that. It's a pretty weak bounce at the moment, but you have to respect that it's still sitting above this 50%. So the 50% of the daily move. All right, so if you want to have a look at it here, low to high, it's sitting above that 50%. But if we break it down to the shorter term timeframes, just to give us a bit of perspective for the short term here, you can see it hit dead on 50% of that decline. It's pulled back to sit on the previous 50% or the major 50% there at 61K, and it's testing again at that 61,800. So these are short-term moves that'll produce short-term results, but you need to see all of these layer on top of each other. The 1 hour work, the 4 hour work, the daily, the weekly, and that will get you bigger moves happening. But for now, the market is basically still between that 60K and the 61,800. A nice little fib number there, 61.8. Love that one there. So that's the 1 hour. Looking at the 4 hour, similar sort of pattern there, pulled back. 61.8 is still the number to beat. Let's take off the shorter term timeframes. Should it remain above 61, then 63 is the next number to beat. And that's what we were looking at last week on the video there. So that's Friday, 10 a.m. for me. It got right to 50%, hit it, and then rejected. So rejected dead off that 50%, came back to the lows here, and is now trying to climb back to that 61. So it's pretty much just been a ping pong game here now. 63 is first target, 65 is the longer target, breakdown is 60.5. Well, your guess is back down here. Onto the fear and greed, 57. So we're still in the greed. Really have not seen any sort of extreme, we haven't seen any extreme fear since 2022. And in terms of fear itself, we've barely seen a day or two of it going back to May when it dropped to 56K. So I maintain that this has probably been it has been the least feared bull market. Do we need to see more fear? I mean, again, ideally, I would like to see that to try and reset some of the market sentiment. But at the end of the day, it doesn't necessarily have to happen, provided we can hold our greed aside, not get too extremely greedy, and just sort of sit between this neutral for quite some time to reset the market psyche out there. So moving on to the total cryptocurrency market cap. I'm going to hide this. This is what we're looking at last week. There's Friday. Saturday, Sunday have happened, and now we're at Monday. So this particular red fractal that I've got in the background here, this is taken from 2020 at the end of the year, if my chart wants to load, right before the market basically took off. So it's just back here. And it pushed up, broke out, sat on the highs again, and then took off. So overall, that particular period, I'll just take a measure here, from that low point to that, around this breakout here, it's about another 100 or so days. So call it about 3 to 4 months from that particular low. Doesn't mean it has to happen again. Of course not, but I wouldn't mind just having a bit of a measure there to keep in mind what happened in the previous times. So coming out to about 100 or so days takes you out to about a July period. So only about 2 months from now. It's not that big of a deal really. When you can see this start to consolidate, put this on the log and it looks almost pretty similar. Log there, higher low, higher low, higher low. You start to see a break above that 50%. That is going to be a very good sign that altcoins have likely bottomed. As we talked about, posted on X as well. Make sure you're following X. Links to that in the video description. Probably a good time to mention our TIA Premium as well. Link to that is in the video description. And of course, our free crypto and economic report is out tomorrow. Link to that is in the video description as well. Where else would it be? So back to the fractal here and that 50% level, looking at that break above 530 billion, that's probably going to be another pretty decent sign that you're going to see this thing start to run. Now I've got 100 days written here taken out to July, but if we look at the fractal itself, where that starts to really break out of these tops, I mean, it tests them how many days into it? About 50 days from the low. So that comes out to the end of this month. Test it again throughout June, and then it really starts to take off 2 months from that low there. So that's 60 days. That's about mid-June. Yeah, that's about the mid-June timeframe there. And then you really start to see that run happen. It's not at an all-time high yet. That would be somewhere around July, mid-July as well. And then I've got here a new all-time high. If we were to take a similar measure to what happened in the past cycle, that'll take you out to August. So I think there's probably some explosions to happen here when you start to look into Q3, maybe end of Q2. Keep an eye out for that. But if I had to bet only between the two of them, I'd probably have to go with Q3 and just miss out on some of those gains at the end of Q2 if I had to take one specific quarter as a bet. You know how it works. So not that we have to, but it's just a simple way to look at it like that, to give you a black or a white answer. So that's at the tipping point there, all-time high. Let's see, sometime Q3, but I reserve that it could be the end of Q2. Obviously, I don't think it's May, and I probably don't think it's going to be early June. That might simplify it for you a little more. ETH BTC on the way down here. It's still looking relatively weak. This previously did look like some sort of consolidation, but it has broken down from that point. So that's what happens when you look to get in early. You have to just be prepared that that might not work out. And so far, it has not worked out. It's the way it works. But the beauty about it is if you have stops in play, well, then they're very close to the market and you lose much less. So on the flip side, if you are traders and you understand that and you're not too emotionally attached and you sort of don't know how to take a loss on your trading, provided you're mature in this sense, well, then I'm looking towards our next white line here, about 4 million Satoshi. So 0.04 ETH BTC for some other sort of support if this yellow horizontal doesn't hold up, which, in the past it has held up, you can see it break underneath, but not by much, and then reclaims that level before it goes on that next bull market. So somewhere within this vicinity now. This is my major line here, the 50%, and then that white line there, which is where the market had broken down from at 0.06. So onto some other stronger altcoins. Solana's been looking relatively okay here. This is Sol versus BTC. It's still holding up. Remember our higher lows, the cryptos are looking like they were getting into higher lows. That was back in April. We got that higher low on the 13th of April against BTC's value, which is a good sign. That's showing some strength for that altcoin, whereas some other altcoins had started to break down, not including the ones that had run up late in that movement. So if they got a top later than the majority of the altcoins, some of those are still finding some lower prices, but basically the stuff that all topped around that March period, they've been putting in higher lows. So that's a strong sign. Render, that's been one of the massive standouts here. So that's been up and up and away. 15% from a new all-time high against its Bitcoin value, and against USD, it's at about 26% away from a new all-time high against its USD value as well. Broken past the 50%, it's putting in some higher lows. Can it retrace? Yes, of course. I don't know what exactly happens on the black side. All I'm looking at here is reading this to let me know whether there's some strength or weakness. I don't look at this thing to say it's a must buy, it'll never go lower, and it's only going 100x from here. That's not how the trading thing works. You're just looking at probabilities and risk management, protecting your portfolio. All right, so I was going to get into a rant, but I don't think it's worthwhile at this stage. Just a simple review of some strong altcoins here and how they're looking on a chart so that you can reflect on that in your own charts. All right, so I've got some personal updates here for you guys that are following the channel. Thanks again for your support. And before I do, shout out to all of our traders crushing the market here. Links to this TI Premium link is in the top of the video description. Crushing it. Well done, guys. Lots of different traders on here again, so fantastic. And of course, Ricardo's taken a clean sweep on the tops and some first ever perp trades here. Well done, Grum. All right, guys. On the weekend, finally had the second kid, or at least Beth had the baby, and I was there to help out. I just thought I would mention that. Voice is a little bit croaky. Sleep's not too bad. Beth's obviously coping with the most, the lack of sleep here. And yeah, it was an absolutely amazing experience. So if I happen to be not online as much or, not posting as much, well, the baby is only 2 days old. Pretty amazing experience. If you ever get the chance to in your life with an amazing partner, definitely go for gold. And you guys who are parents now, fathers, maybe you've got 20-year-olds now, you can provide some of your wisdom in the comment section for myself. 2-day-old and my 3-year-olds in the background there. We had a home birth. The midwives weren't able to make it on time, so pretty crazy. Beth and I delivered the baby ourselves. So yeah, another amazing experience. And yeah, if anyone else gets the chance, go for gold. It's absolutely incredible. All right, guys, I'll leave it there. Talk about father stuff another time. My voice is gone, but I appreciate your support. Smash up the likes, even if it is for my 2-year-old. Don't have a name yet, and I'll let you know when I get the name for our baby as well. Let's go, 4,000 likes. I'll see you guys at the next video. Until then, take care and peace out.